Good morning. This is Hyperwave. I am Leah Wald here with Tyler Jenks. I am wearing my Costa Rican surf shirt today because there's a swell and I really wish that I was out there, but given that my knee's broken, I will get out there as soon as I possibly can. But I'm evoking the swell and the good vibes, and especially because Tyler used to live in Hawaii. Actually, people may not know, but he was in the Coast Guard there. Pretty badass. Wow. Getting his MBA. Sorry that I just cussed on live, but that just happened. So yeah, so we're gonna do it was originally entitled A Brief Look at Bitcoin. If you remember the last time, we actually cut it down straight to 20 minutes, but we got some great questions that we did want to answer and just cover S&P very quickly, as well as gold, because we've been getting those questions and we haven't seen you guys for a while. So it should be a brief look at all three, and let's see how we do. Mr. Ty, how are you doing?
I'm doing great, thanks, Leah. And you're looking terrific, even though I know the struggle you're going through. It's great to watch somebody, that bounces back so quickly with such a great attitude. And I know you are going to heal very quickly and get back to everything you were doing, regardless of what all the doctors and surgeons say. So with that,
Tyler, I'll only bounce back when Bitcoin bounces back, or when we get our prediction correctly, which it sounds like we are. So
it's got a broken leg right now, but it will heal and things will get better for Bitcoin.
Maybe we'll have the same timeline. So let's see what's up.
About perfect.
All right.
We apologize. Things have been very busy with Leah and myself, just with a lot of things going on in our personal lives. So we have been remiss. We've tried to make up for it by tweeting more, just so you know what we're thinking on the short term. But this is a fairly important time right now in not only the Bitcoin world, the crypto world, but also with the major traditional markets and with gold. So we're going to quickly, this is not going to last a long time. It'll be about 30 minutes. It's going to be very quick. You're going to have to pay attention, write down your questions. We won't be able to get to them today, but we do try to get to all those questions either directly with you or by going on Twitter and giving our opinions on various things that you ask or responding to criticism. Now, I've been thinking a lot about the input we've been getting, not only on YouTube, but on Twitter. And I can sum it up by saying there's a disconnect between how Leah and I have decided to do these vlogs. We've built a huge amount of information over a long period of time. I think we're up to about 65 of these vlogs, just over about a 3.5 month period, in which we've tried to explain step by step a number of very difficult concepts in both fundamental and technical analysis of macro markets as well as micro markets, as well as crypto markets and as well as Bitcoin. It's a sequential progression of information. If you came into the middle of that, you missed the first half, and I hope you find time to go back and see what the steps are. If you came in very late, meaning in the last month, if you became a follower or a subscriber recently, I can understand your confusion and your frustration of some of the things that I say, because you don't have the context that other people have. So I caution you to, if you are willing, to go back to the beginning and try to understand the thinking. That's what we are trying to do. We're not trying to give you advice on what to buy or sell. We're trying to show you the summation of 40 years of looking at almost every technical tool available, marrying them to almost every fundamental tool available, first of all, using all of that to manage hundreds of millions, billions of dollars for large institutions over many, many years using those techniques. And now coming to you, trying to distill all of that into, I think, short-term, Bitcoin looks weak. So with all of that, I'm going to go right to screen share, and we're going to start off with the most important element of what you should try to take away from not only our YouTube vlogs, but our comments on Twitter. And this is the most important thing that anchors.
Hey, Ty.
Yes.
Can I jump in for a second?
Please do.
That's so funny because first of all, Ty likes surprising me on these, so he does not prep me. And I love that you brought up Hyperwave, the chart, our beautifully drawn chart that you made, because I was about to exactly say that. So obviously Ty is speaking about, yes, that we're trying to share our thoughts and opinions on how we not just view Bitcoin, which is our love, and this whole space of what we've just, caught the Bitcoin bug, but also, right, that how we, from our various and different perspectives, view all the macroeconomic factors. And just as a reminder, or to the people who are new to watching this show, and again, we are, hoping to keep this very quick, but Hyperwave exists when there's fundamental shifts in the world, when just crazy things happen that shift almost everything. Technological shifts, financial shifts, all of that is happening because of Bitcoin. And Tyler can always comment, a little bit more on this one, obviously. But so yes, we are definitely coming with, hopefully short, that we're trying to keep it price action of Bitcoin, and our thoughts, especially Tyler's, obviously, on money management and how to think about investing in Bitcoin. But also in the grand scheme of things, how we see it is within the macroeconomic, as well as just all, political picture, historicity, within the experts and mentors that we've had in our lives through, especially Tyler, through literature. So that I guess the takeaway of what I'm saying right now is just simply put that, yes, we often are narrowly focused on these vlogs to explain what's happening in Bitcoin, because that's, for the most part, why we have you guys as viewers. But it's also coming from a different perspective of that, and especially Tyler, this hopefully holistic understanding of macroeconomic factors and also these other genres that we are fascinated in. So that's why in some of the vlogs we diverge and talk about Chinese macroeconomics and trade policy, etc. But so I guess the big difference is just that it's not narrowly focused on crypto, although that is what we are speaking about, but also that it's coming from, and we will speak more about, just the macro perspective rather than just staying in the weeds. And that's also something that we want to be a takeaway for everybody. That just last, sorry, Tyler, is that the news in the Bitcoin space and the crypto space, even though there's a lot of really interesting, huge, fundamental and crazy news that comes out, a lot of it can be repetitive in that a lot of it is, if you're thinking just by being in the weeds, just the minutia of what's happening every day to day, you need to also take a step back and think about the greater picture, and that these pieces all fit together for this huge fundamental shift. And that is correlated exactly, and also the price action. So Ty, please destroy me if I was totally wrong, but I loved and got excited when you pulled up that chart, and that's how I was going to respond to what you just said.
Well, that's great, and thank you for that summary, because it's right on target. That's what we're trying to achieve. What you're looking at now, for those of you who haven't seen this before, is a chart that I drew 40 years ago. And a lot of people say, what's this stupid hyperwave? Nobody else in the world uses it. Give me one other analyst that uses it. Nobody. Okay. I kept this under wraps for 40 years. I used it to manage money for myself, my family, large institutions, large pension funds, bank trust departments, and I still use it today. But when I was told that somebody that knew about Hyperwave let me know that they believed that Bitcoin was in a hyperwave a year ago, Leah and I decided to make public this technique called hyperwave, this technical movement that I discovered, I founded, and I used, and I didn't tell anyone else about it. I was very selfish about it. Now I am showing everybody what it is and how it works, because Bitcoin was in one of these. You need to go back and look at previous vlogs to understand what 1 means, what 2 means, what 3 means, what the red numbers and the green numbers mean. And then you need to look at the 40 or 50 or 60 different examples we've shown that go all the way back 100 years and still are going in today before you can understand that it doesn't matter if it's Bitcoin or the Japanese stock market or the US stock market or gold or silver or 30-year treasury bonds. What you need to understand is when anything, any asset class gets into one of these things called a hyperwave, it gives you an enormous advantage over everyone else if you understand what that means. And you can fight it as much as you want, and you can try to pick it apart. But what I'm telling you is, after watching it over 4 decades, accurately predict the movement of some of the biggest, most important asset classes ever, I think you will come to respect it the more you look into it. So that is a hyperwave. That's why we call our vlogs the Hyperwave channel. It is the basis of much of the thought that I give to making calls, short, intermediate, and long term, on things that are in one of these patterns. Now, number 2, before we get into the details of Bitcoin right now, number 2 is there are 3 types of both technical and fundamental analysis. Type 1 is called reactive. Type 2 is called indicative. Type 3 is called predictive. And we will do a whole show on those 3 things. No one else has used those 3 terms to describe fundamental and technical analysis until I just did 30 seconds ago. But it's a very important concept that when you look at a technical trading system like Elliott or Gann or sequential or hyperwave or consensio with moving averages or Bollinger Bands, you understand, is it reactive, indicative, or predictive? And once you know that, you will begin fine-tuning your analysis of what other people are saying about each one of those systems. Okay, I promise we will do a show simply on that topic. Let's get to the meat. Here is a picture of Hyperwave with Bitcoin going back to when it was at the beginning of 2017. And I've only got 1 line on this chart, which is my phase 2 line, because the phase 3 line is no longer valid as a phase line. I keep talking about a target down around 4,700, and that is because of this line. If this line is broken, then we are going to go back down to the beginning, which is 1,000. Not because I want it to go there, but because of this chart. When you get into one of these things, there is good news that lasts for years, and then there is bad news that lasts for years. The good news takes you up to the top, and the bad news takes you back to the bottom. We have passed the good news portion of Bitcoin. We are in the 5, 6, and 7 that takes you back to the beginning. That is my thesis. That is what I have been saying since the peak up at 20,000. And that's why I am so persistent in looking at the negative side of this action. All right, now what I want to do is I want to go to a shorter term chart after looking at the Fibonacci from the very beginning up to the peak. Up to the peak at 20,000, we began the descent that took us down to the 38.2 level of Fibonacci, and then back up over 23, and then back down to 50, and then we broke down to the 50, back up to the 38, and all the way down to the 61.8. From the 61.8, we ran all the way back up to 38.2, double topped, back down to the 50, broke the 50, and then came back down to the 61.8, back below the 61.8, tried to rally, got all the way up to the 50% level. And you remember that recently I said, I believe we have run out of steam at 10,000. That wasn't a magical number. That was 9,951, the 50% Fibonacci retracement, plus a lot of other technical things that I have been talking about. Now we are back going down to the 61.8. And there is nothing magic about the 7,600 target that I stated yesterday in terms of a short-term move back down, because that is the 61.8. If we are able to bounce off of that, we have the possibility of another short-term move up. If we take that out, we are very probably going to take out these lows and go down to the $7,400 to $7,700 level, which is 78.6 on Bitcoin. But all within the context of this pattern called a hyperwave, which is why we keep using that term. And one more quick aside, these things are very, very, very rare. They only occur when there are massive macroeconomic shifts in either the interest rate credit market, with the US Treasury bonds showing the largest hyperwave ever that took 80 years, 40 years to go up to the top and 40 years to come back down to the bottom where we are today. The Japanese stock market over 20 years, when Japan went from one of the minor players after World War II all the way up to challenging the US before going into a hyperwave and breaking all the way down again. The US stock market back in the 1920s and currently the gold market when we went off the gold standard. And today, with this market you're looking at now, the Bitcoin market, which has the potential of changing the entire world economic financial structure. I have been saying, however, that it is too early to say if it is going to achieve that. This part of the hyperwave said, here we go, we are going to achieve it. This part of the hyperwave is saying we got way ahead of ourselves, we're running into problems, and we need a reset. That reset could have come at phase 3. Now that is broken. The reset could come at phase 2. If that breaks, the reset, in my opinion, will come, but not until we get back down to 1,000 or below, which was the starting of this hyperwave. And from that point, we can go up again. Okay, where are we right now? And why do I keep switching my short term from 7,500? I thought we could get up to 10,000. We did. From 10,000, I thought we could drop back to 9,000. We did. From 9,000, I thought we could get back close to 10,000. We did. From 10,000, I said we were going to drop back to the 8,600 level, between 85 and 8,750. We did. Now I'm saying that I think we will probably drop down to the $7,500 level. And as of last night, we dropped down to 8,100, and we're sitting at 8,187 right now. I still think the next target is 7,500, and then we will go neutral probably and take a look at that point. Okay, here is a quick summary that you've seen before of the way I think when I look at long-term charts and then get down to the specific of the day-to-day. Here we are going to first of all throw on a number of indicators, beginning with a stop and reverse point. The stop and reverse point turned negative all the way back close to 16,000, and it has been going down ever since. That is the overriding principle, technically, of what Bitcoin is doing. If we get up to 10,700, 600, we will stop that part of the technical decay. Let's take a look at the 3-day chart. The 3-day chart, after being negative, went positive off of this bottom at 6,000, but it went negative 2.5 weeks ago. And that occurred right at the 10,000 top, where the other technical indicators are telling us we have a period of weakness. And that's where we are still in on a 3-day level. On the 1-day level, we are in a negative territory for the last 6 days. On the 12-hour, we went positive briefly for a 12-hour period and then right back into the negative for the last 2 12-hour periods. For the 6-hour period, 3 6-hour periods in a row now are in negative territory. On the 4-hour period, 4 4-hour periods are negative. For the 2-hour period, we've got about 7 negative 2-hour periods. On the 1-hour period, we went positive briefly with this spike last night, and now we have just returned to the negative side. And on the 30-minute period, we have just returned back to the negative side after the brief pop last night after hitting 8,100. So that is the sequential way of looking at the movement of any price, not just Bitcoin, any price of any asset class. So I just wanted to go through that very quickly with you. I'm going to do the same thing and take even less time by taking a look at the Bollinger Bands. And the Bollinger Bands over a weekly period are very negative because we, after breaking down at the top, came down to the middle, and we tried to get above the middle line, and now we've broken back down. We need to test the lower line, which right now is coming in at 5,100, unless the price can get back above the middle, which it has not done ever since the top, the same as my stop and reverse points. If we take a look at the MACD on a weekly basis has been negative all of this time, ever since this crossover that occurred with this big down leg, which is also right around the time we took out the phase 3 line. And it's never gone positive since. Now, it is true that the histogram has been getting stronger Until today, right now on a weekly basis, we are challenging last week's, and we could actually increase to the downside, which would be a very negative signal. I want to take a quick look now at the relative strength index and show my big concern has been that after all of this overbought in the upside of the hyperwave, we have never hit an oversold level. We got back up to 50, and now we're headed down again. I believe we're going to see this go oversold. And now I am going to quickly move to the gold price. Here is what gold looks like over the last 10 years. To me, the most important thing with gold is this green line. I'm not going to talk about hyperwave today. I want to talk about some specifics having to do with Consensio and where we are. And to do that, I'm going to look at a 5 or
hey, Ty.
Yes, please.
So I've already told you live viewers that Ty does have client calls in 30 minutes. So we have buzzwords to keep him at his 30 minutes, and his today is huma huma nuku nuku kwapa ah. So if you guys know what that is, then you can live chat that one.
It's different.
But, you know,
it's different than pneumono ultramicroscopic siliconovolcanoconiosis, but that buys me 5 minutes. And in 5 minutes, I will explain what my thinking is on both gold and the S&P. Okay, this is the weekly chart going back 3 years of gold. And this line, the one that I showed you on the 10-year chart, to me is the most important.
It's that you have 30, so just letting you know.
Yeah, I've got to do some preparation, though. So if we take a look at a number of things here, I've actually drawn a third green line that you can't see because it's buried in the price, which is a 2-week moving average. So I've got a 2-week, okay, so that didn't work out right. So this one is the correct one. I've got a 7-week and a 30-week, which is the red and the blue lines here. And we've gone over on a number of occasions the fact that those two never crossed until we got up over 1900 and then came down. Then we went into the bear market that took us all the way back down to 2016 at 1100. And then we went back into a bull move up, a bear move down, and from this point, we have been in a bull move. And so I have, for clients that I manage money, gone into gold throughout this movement. I got cautious in this movement down and then reestablished positions all the way back at the beginning of 2017 and have been in them ever since. You can't see it on this chart, and unfortunately the other chart that I just showed you, I used the wrong moving averages, but they have not crossed to the downside. So now let's take a look at a longer period moving average. This is a 50-week and 200-week and 2-week moving average. And what you see is we did break this week, yesterday and the day before, below this shorter term moving average. And the long-term moving average that has been coming down from the top of 1900 has gone flat, but it is slowly turning up. So on a long-term basis, I'm still very bullish gold, but I will begin to get nervous as it comes down. If it comes down to the 1250 area, we are now at 1290-ish. We need to get over these tops at 1375, and I believe we will. But right now is not the time to be aggressive on gold. If you are in gold, and I'm talking to a couple of people today that are in gold, I am going to warn you to begin getting cautious the same way I got cautious a couple of months ago on the NASDAQ, because we came down and the price broke a shorter term moving average. Notice that it did it here. Notice that it did it here, and also came down through the long-term moving average without turning down the price. So this is only an early warning sign for gold. It is not in any way a death knell. In fact, far from it. But this might be the time to begin stopping a purchasing program you might have, and even considering taking a little bit off the table. It's too early now to make that call because we're not at the end of the week. We could very easily turn this around and be back in a full bullish stature. We have not done that as of yet. And I will talk about silver at a later time. Okay, S&P. Very quickly. I got nervous on the NASDAQ, and the NASDAQ rolled over. I got nervous on the Dow and the S&P, and they both rolled over. On this chart, which goes back to 3 years ago, you can see that on a 7 and a 30-week moving average, the blue and the red line, ever since the beginning of 2016, we have not crossed over until recently. That is an area of concern. The first area of concern came when price dropped below the blue moving average. The second area of concern came when it broke during the week below the long-term moving average. Those concerns were alleviated when it bounced back above both of them. Those concerns were reinstated when we dropped back below both of them. Those concerns were relieved when we have now bounced back above them, and the short-term moving average, the blue line, has moved up, but it is still below the red. So we are not out of the woods on the S&P, but you remember that earlier this week or late last week, I can't remember, I said that I am no longer nervous about the S&P and the Dow. To me, by testing that long-term moving average on multiple occasions and still being able to move higher, and now having the short-term blue moving average move up, I am now confident that the S&P and the Dow are in a position to continue the strength of the last 3 years to the upside. But I warned in that announcement that the NASDAQ has still got me puzzled, and I'm not ready to say that we are ready to give it a full green light until we take out the old highs on the NASDAQ. And I'm not going to show you that chart. Well, I can. No, I'm not going to show you that chart. It'd be too confusing. But what I'm saying is the stock market in the U.S. remains bifurcated between the tech stocks in the NASDAQ, which are also in the S&P, being so large and so dominant that until they really get going to the upside, I have to remain cautious on the NASDAQ, which means holding a 15% cash position in the NASDAQ relative to the other indicators, which I am fully invested in and believe that they are going to be able to go up regardless of the NASDAQ. That will change tomorrow or the next week or the next month, depending on what happens specifically with the NASDAQ. But we will revisit that. Okay. Too much information in too short of a period of time, but we had been remiss in not being able to talk about these very important things with you. I hope that brings you up to speed. Please, any comments that you have, we would love to hear. We will try very hard to get back to it. Thank you very much for listening. And now back to Leah.
thank you guys, and hopefully we'll be able to vlog a bit later or tomorrow, but you guys are the best. Have a great day.
Thank you. Bye-bye.